Just realized boomer moment. We are live and mics are muted. So go me. Anyways, this is going to be kind of like the intro back to me making public content, I guess is the way to put that. I've been letting Max kind of take the reins. I think he's doing a fantastic job. I do go on other people's shows. So if you guys aren't watching Sin City on Tuesdays, if you're new to the channel, definitely go to Sin City Crypto. Every Tuesday I do TA on there, but they also put together one of the better produce shows in crypto. Like it's pretty actually almost amazing. It's impressive. So definitely go watch those guys. But I've been going on other people's shows for a long time. I get kind of burned out on the grind of making content. But, you know, as we get into this portion of price action, I've been calling for a range since we got up here at 73K after we gave the level at 73,244. You know, it's been a boring part of the market. And I kept saying it's going to be boring. It's going to be boring. Lots of people are going to leave, get disinterested. And we really need to kind of redefine what we're looking for in terms of invalidation on the high and medium timeframes. So this will actually go over a lot of the stuff I've given to our members. Our members have had this information for a long time. Some of the more recent information from last week and this week is still very pertinent as it does pertain to the end of the month. So if you guys are looking for, you know, something to, you know, latch onto in terms of a price target or a confirmation of a change of behavior where you're like, okay, Bitcoin is making its move, you know, you're going to get that today. So, you know, it is a long-term and medium-term thing. When I say that, it's going to be a couple weeks to maybe even months that you have to have these levels on your chart. But, you know, that's the name of the game. You're going to consume a lot of content in between now and then. And I would highly recommend that if you're, you know, not organized and not writing down your thoughts in like some form of a journal, whether you're trading or investing, that you do so. I think that would benefit everyone involved, especially if you're putting money on the line. I think that's a very important step. So, you know, it's not going to turn you into a day trader. It's just going to turn you into a better version of yourself and probably all aspects of life if you were to apply that to everything, but neither here nor there. So the main focus will be that you keep these invalidations and high time frame ideas in your mind so that you can stay grounded when we are approaching areas and understand what you're looking for, so you're not buying into the YouTube clickbait, things like that. I did incorporate an AI service for some optimization since the channel has been dead. You know, we went from getting thousands of views to now we're barely getting 100 and some change because I've just kind of let this channel die a little bit, which is my fault. But you know, it can be revived, and I figure why not leverage artificial intelligence? And it came up with some pretty wild things. So be testing that out. So if you guys see things and you like it, let me know either in Discord or comment on the video, like the video, all that stuff, or dislike it. If you don't like it, dislike the video, right? That's I do see dislikes. I don't think the public does, but I see them. So if it's something you don't like, I kind of need to know. Yeah. Let's get into the charts and the chat because this is going to be a pretty, you know, casual live stream. You know, we're going to recap a little bit. I don't want to spend as much time recapping as I do want to spend on what we can do and go from here. I hope you guys brought a beverage. I have one beer open and then two backups. I don't think I'll get through all three, but we're just drinking a standard pale today. So the koozie is the winner here. It's Ho Ranch from pretty close to my hometown there. So had that koozie for over a decade, but that's the go-to today. So, chat is popping. What's up, Mishka, Matt, Pullman, Gazgano? I haven't seen you in a while, Mr. Operator. Love to see you guys. You can't hear anything. Sup, Tar Heel. My guys, Matt is drunk, which is great. We love that. Enjoy Matt. Matt's like 21 or 22, guys, so he can definitely enjoy the weekend. My kids are here, so I can't really partake more than just a couple beers. But well, my daughter's at an overnight horseback camp, but my son is here and don't want to tie one on or anything. So going to definitely keep it kind of calm, but. You know, this is a segment as well for you guys that are watching. You guys are pretty religious followers of the channel. I do kind of want to do this segment once a week and call it Beer 30 and start bringing on traders from other channels. And you guys know how I go on other shows and it's like they let me do my analysis and they do their analysis. I'd love to do something similar, except I want to have a couple beers with them and just chat shit and have fun. I don't want to, just constantly be talking about markets. I want to talk about other things, like if they're in the fitness, whatever it is. Obviously, we're always going to come back to providing value from an analysis standpoint, but it's just kind of a nice change of pace where you get to know people and, have a good time. So I think that would be a good one. It's 5:40 a.m. where you are. Yeah, definitely don't have a beer then. Yeah. Keep posting. Yeah. So that AI service, Mishka, does actually, it reads my entire transcript of this video. It's fairly expensive. And it gives me a new title after the video is posted to optimize for search results. And then it'll actually give me, it'll go ahead and clip shorts for me and give them to me to review so that I can post them on whatever platform I want. So it's kind of a costly service because, that's a lot of upload. But yeah. Do you have a swag free logo and beach tank top? I could make you one pretty easily. Me and Max have joked about a swag store. I don't know if you're in the group because, people's YouTube names are different. But if you guys don't know, I did meet Poolman in person. I don't want to use his real name because I don't want to, out him or anything. But I met him in person and great guy. We got to go have lunch with my son in Kansas City and kind of just chat shit. And I gave him a hat, and he really liked the hat, I think, because it's actually the same fit as this one. I specialize my hats in low profile crowns that fit more close to like a baseball style cap. He said that you've avoided meeting him, Matt, by the way. I know that you said you have his number, but he said that you've always bailed on meetings. So definitely don't do that. He's a cool dude. He's a great guy. So, but I can definitely get a merch store up and running. The goal would be to produce quality stuff. But this shirt is probably my all-time favorite, and you can't get it outside the United States. So I don't know where you're located at. But if you're in the U.S., I can probably get some kind of a swag store going for you guys there. And then I'll have to talk to Max about doing stuff outside of the U.S. But anyways, it has been a few minutes of us just chatting shit, 8 minutes into the video, and we haven't done any TA. So the recap, right? So we're recapping the price action. Let's keep this to as minimum as possible if we can. And let's make sure I've got EXO up on this screen, and I will pull it over so you guys can see it while I'm talking. I don't want you guys just to think that I'm, talking so that you can't see what we're discussing. But EXO is a pretty simple idea. I actually believe I have left up what was going on in this price action. You can see this was the box I gave this morning for those that are in the group. I said this is where we're looking to long. We're looking to short above this, going into essentially the previous day EQ, and it was the VWAP closure right here. You can see it's just beneath that as well. And the previous day point of control does also come in there, right? So you can see you have like a box that starts to form here, and that you had a Dalton, right? So the Dalton is you've closed outside of the value area of the prior session. It used to be 80-20 is what it's referred to. So if you guys look it up, it's called, I think it's James Dalton or Dalton Capital, and it's 80-20. It's a market profile strategy from like the 90s. But it's still very relevant. It just works off range acceptance. Theirs specifically is 2 30-minute candles within the value area after closing outside of it at the session close. And then, they have an 80% chance of cycling that range. Those statistics are not valid for that setup. It's more like 75% to the point of control and 50% for the range rotation. And you can see that it did attempt to form the Dalton because you opened here, you got back in yesterday's range, 2 days ago's range, Thursday's range, and you failed to get to the point of control. You just ran into resistance at this biweekly SFP, previous day EQ, there's just a lot here, just littered with resistance. And then the biweekly open was the most important level as well. So we were looking for a long off this level here going into the open of the New York session, which is just the VWAP and a local gold pocket. There's really nothing special about this. Okay, so that was the trade. It's just a very easy trade backed by the previous day value area low. Okay, so that was the long. And we had talked about how you had to start looking to get out of that position in this region in terms of at least to take profit one. If it could claim this area, yeah, there's a pretty good chance you could cycle to the previous day value area high even, and that would look better. But as you can see, that did not happen. So we go from there. And then shout out to Twin. He's in the chat, obviously, Matthew. This is his indicator he's made for us. Been trading with Matt for, I don't know, 3-4 years now. He's been following me around in Discords. I can't get rid of the guy. But he has done some stuff with cumulative volume delta and got it over to TradingView so that we have a, for the group, if you're in there, the indicator can be found. I think it's on Max's channel where you can download it and get access. And it's just an indicator to give you longs essentially for, based on delta. So really simple strategy there to help you out at key areas. And this was a key area here. So when we go to what we're looking at here, this is your monthly pivot, right? We knew going into this monthly pivot that it was an 80% likelihood that we hit the monthly pivot. If you were to go ahead and look for the closure as well from a volume standpoint of last month, not just a price standpoint, it comes in just beneath it. So not too far away, but it was a 69.23% chance of hitting this little blue level, which you can see is pretty much tapped at this point. As you can see to the T, that is what you've bounced from, right? So that box has filled out. We could bring this back up to here, and this was the box that I gave on Twitter, and it was a 69.23% chance of filling the box. That is your bounce zone. The question is, do we like this low? As Max did not like this low over here. He called it. He said the low is just okay. It's good for a long trade, but realistically, it's not like the best low. When I go over to XO charts and I take a look, we could get a little bounce here over the weekend for sure. But I don't see any buying tails. I don't see, off the top of my head, I'm not seeing any massive amounts of people just getting absolutely fucked at the low here. Excuse my language. Sorry for cussing. But, you do have some CVD divergence that did form. It's just really not going anywhere because you have declining open interest on the move. You don't have people really stepping in. It's just kind of a bounce. So for me, I would expect this low to probably be taken. And that for now doesn't mean I wouldn't take a long out of this region because, you really don't want to be shorting here. You want to wait for that bounce to maybe short the bounce, kind of like Max was talking about the other day pre-FOMC. I mean, he called it to the T that we're looking for that test of that gold pocket. And once we get it, he's looking for a short, and I think it was something like this. I don't remember exactly when Mr. Powell was talking, but it was somewhere in this region of the chart, and we got exactly what Max was discussing. We got the move up and the short down into higher time frame zones. Now, when we zoom out, and we're going to work into the high and medium time frames on like what's actionable for us on the chart in terms of finding invalidations of when can I expect a new high. If this happens, can I expect a new high? Or, should I expect other things if, price does this? So this is an if then type thing. And that's a lot of trading. And I'm going to get rid of this line. Obviously, this is the monthly pivot. Again, it's more of a statistical target. If you're not familiar with pivots, they're really, really simple tools. Some people kind of shit on them, but they shouldn't because you can use them for mean reversion. And some people shit on mean reversion too, and that's fine. They're also usually they're momentum traders, which is fine. Everyone, if you can fuck up momentum trading just like you can mess up mean reversion trading. You just have to have a strategy that works and understand where the probabilities lie in either scenario. There is no one catch-all way to trading. There's a way that we like to do it because we're able to put a system in place to give us an edge, which is what you want to do. So in this case, we know that there's a pretty high likelihood we're coming back to this level. How do we gauge if we are? Well, then you start going into the order flow and looking at the lows, looking for buying tails, looking for trap shorts, looking at participants to see if, that lines up with other major lows and other major data points for us that would allow us to determine if that's an entry trigger. Hence, we go to Max's educational piece in the group, Crypto Hub. That's our group. He has one called Triggers, big ass triggers. There's a slew of information in there to allow you to start taking longs or shorts based on that information, once you reach these statistical mean reversions, because price often goes back to the mean, unless it's trending. Like, and what that means is this: like, price did not revert back to the mean very often in this kind of an uptrend, because, I mean, fuck, dude, like, just look at it. We'll just put on 55 of these guys. So you can see on a monthly basis, when price was trending really, really hard after we broke out, right? So we have this massive consolidation, okay? Price starts trending. We missed 1, 2. We've only missed 3 in a row 2 times in Bitcoin's history. So we kind of knew this was coming back to here. Then you missed another one here, right? So now we're back to consolidation, meaning that if we're in a consolidation, it's very probable we're going to hit these averages, right? Because they're kind of just like overlapping almost. So you kind of know that, okay, 65K is definitely on the table. Do I have anything else that's there? If we go to the bi-weekly chart, which is one of my favorite charts to use at this point, one, you can see that the bi-weekly open would be very important to reclaim. The level for us has been 70,447. But we will talk about how we're going to start moving that level down a little bit in terms of time frames, right? So the higher the time frame goes, that level will shift. And we'll be talking about the quarterly chart when that happens. But 70,447, right? You've got to have a bi-weekly closure above that. If you don't have it, then kind of fucked. This was the change of behavior here. You can see that this was your high from the biweekly candle in April, and resistance on the SFP claimed and closed above. You did push above this level, but at 67,243, you didn't actually confirm it. So you closed above once, you opened above, you did not close back above. So it would really be nice if price could come and make this candle green, and then price does look very different. Things look like it's going to try to move back up to at least 70,447 and maybe try to make a new high at that time. And we'll talk about those types of confirmations on a little bit different time scale in a second, so that way you have more than one thing to go off of. But when you go to the daily, these are the only levels on the chart here. 67,243 was given in the group as a key level. This has been your key level for so many weeks and days. And here it is getting rejected, right? So keep that in mind. It's all about closures here. Just like right here, we needed to see a bi-weekly closure, not a daily closure above this resistance. And you can see we 1, 2, nuke below, right? Resistance. So as of right now, you can cruise back out to the weekly time frame. And we did the same thing in this region, where I'm going to actually turn on the ellipsis so that if you're following at home, you can keep up. Okay, so this was the low we had here. This is just a simple swing failure pattern, and these levels will turn into support and resistance in good places that you can use for triggers. And you can see resistance, resistance. What do? We break above. We go back to the top of the range. Now we're coming back into that support zone. Okay, so on a bi-weekly level, this is going to be support. Like, we're in a pretty major support zone now because of the monthly pivot. But realistically, if you're looking where traders have settled up on the highest of time frames, this is probably going to be a larger box than people really want. If you were to put a basis on it, it's 64,003 to 65,020. Believe it or not, that's not even 2%. This thing is a really big asset at this point. It's 1.59%. So it's not as big as you think. But you don't have to be exact. I mean, we have some pretty exact levels here, but at the same time, we're just looking at this region. And when we get there, what are we looking for? We're looking for a reason to take an opposing trade in the opposite direction, whether it's just a short-term day trade, kind of like we've discussed, where you had to be getting out earlier today on my Twitter. I was going over it with Tom, getting out on a day trade at the VWAP and the previous day low. This trade right here, off the bounce, which is also a daily naked point of control, a naked weekly pivot. You also have the monthly pivot there, that monthly closure, the blue line I showed you at the beginning of the video. There was a lot here to suggest that, we should be looking for reasons to long. And even as dumb as it says, you had an indicator telling you it's time to start looking at longs. And if you went over to, the order flow in this region of the chart, you can see that you've come down, made lower lows here. And then what are you continuing to do? Because you're using the wicks here for CVD. This is CVD. You've got a low and a higher low in place. And you can see that sellers are trying to push the price lower and doing a poor job, right? And as we're coming into the low, what do you have? You have a very obnoxiously fast bottom candle. So as Max says, slow moves are likely to continue. And I'm not looking at anything other than a volume chart here, guys. We're not looking at time in this case. We're only gauging time for how quickly price is reversing, because there's typically, if there's good open interest in buying imbalances, or I guess selling imbalances out of the move if it's the top, can lead you to entry triggers, right? And this was something I used to do quite a bit on when I traded on Bybit, but very similar here. You can see that you've got some pretty, lengthy times here, 3 minutes, 5 minutes, and then 52 seconds with a negative 83% delta candle. Okay. What do you notice immediately outside of that candle? Well, OI is no longer declining, really. It's kind of just going flat and just chopping around here, but you have buying imbalances coming out. You now have CVD divergence forming, so delta divergence in terms of buyers and sellers, and buyers are trying to take control for at least a bounce, and then it comes down to, can I identify where I should be getting out of this trade to protect myself? Because not all bounces mean new all-time highs, right? I think we've all learned that by now. So you would clearly just be looking for things like as simple as, where's my gold pocket? Where's my previous day low? So if we're going out here, this is the previous day low, which is resistance. You want to claim that daily low if you want to do anything with your life in terms of price. And then if you're in the group as well and you use the, I obviously make my own indicators as well in terms of like how I design tools that I use. They're all based on just stuff that I've kind of figured out over the years. But this is a regression that I use for time-based trends. So I use them to track like daily, weekly, monthly, quarterlies. And it was the EQ as well, which has been a very well-respected, trend for the last week as it's been developing. And I'll continue to use this for the incoming week as long as it's relevant, right? And it will change, like it'll deviate a little bit here as we get more price action, it'll change. But we're getting pretty close to the end of it. So it's giving us a pretty good idea of what we're looking at. So you kind of knew that this is at least a take profit one area, just to protect yourself, because this could very easily come back down. I don't know that we have any single prints. Did we have any? So this is what I mean by buying tail and selling tail, by the way. So you have a buying tail here on the bounce from yesterday, right? So we have a little buying tail right here. You don't really have that here today. So not a huge fan of it. No SPs that I can see on this one either. Those have all been filled. So nothing to really update on the charts. I'm going to move this over to here. But, getting back to what we were looking at a second ago with the high time frames, we've gone over the low time frames quite a bit. And I don't mean to deviate back and forth, but you guys do have to compartmentalize this type of stuff if you're going to be both an investor and a trader, which I believe that it's very capable of doing. 80% of my capital I don't trade with. It's just investment capital. Time in the market beats timing the market. That whole, I consider it a bullshit saying, but for 90% of the people, it's actually true. So it's probably not bullshit. So you shouldn't gamble with all your money, because that's what trading is. It's gambling, except you're trying to use an edge, right? You're trying to actually do it from ideally a smart vantage point. But anyways, where do we start changing our mind here on a biweekly, which is closing this Sunday, above 67,243, or if you're being a little more conservative, which I would recommend, I would just call it 67,758. I would love to see price above that if I'm going to be bullish going into the weekly close. If it's above this level, I start to lean a little bullish. And obviously we're going to have invalidations, probably be this low right here, somewhere around 66,000 for wick basis. But, above 67,758 going into the close into Monday, things look okay. This just looks like price action we're all going to forget about one day. Now, as we zoom out, and I'm going to get rid of that 67.7 here in just a second. Actually, I'm going to move this back to here. And I'm going to get rid of this bi-weekly level. It's just no longer necessary. So we know the support that we have in place is here, right? For right now. If that's lost, we can certainly zoom out a little further and, just go straight to the well. And the well would say, we're looking for 61,428 down to like 59K probably, where these wicks are coming in at. And if you wanted to get very, very precise, you could come over here and you can start pulling things either based on time or market structure. You could use things like 1 standard deviation of volume, letting you know that you haven't actually formed the low at the value area low of the range, which it doesn't have to rotate the range in full, but it usually does. That would be the region you want to have on your chart. And I think we're pretty set on the gold pocket just beneath there as well. Yeah. So, everything kind of implying that this is going to be a bounce territory and you are approaching support. However, statistically speaking, you'll probably approach this region of the chart if you're looking for really good long-term trades in terms of like assuming this remains range bound, right? Assuming we're not breaking down to like 50K, like some people will tell you. But that's just what these tools tell you. It doesn't mean they're going to be correct. So you kind of have to take this information and go, all right, well, if price gets there, I need to have a plan and have an entry trigger. That's all you're doing. Just like we had this guy here and we said, well, if it gets to this region of the chart, we're looking to potentially take some trades. Okay, so, that's all you're doing. And the trades here, it did fire off a long signal. There was some other triggers outside of that indicator we have that said go long on the order flow. So, a long would be the best suited choice right here. Shorting into this region is just not a good idea. But again, back to the high time frame. So 67.7, if you noticed, by the way, was the point of control. Basically, that 67.253 to 67.7, that little region, it's essentially the POC of the range. You want to see that reclaimed. And if it is, what happens when you're above the point of control? Well, you go back to the value area high. What happens when you're below it? Typically, when you're below the point of control, you go to the bottom of the range, right? What happens here? Get above. See, it's very simple. Doesn't have to be more complicated than that. Now, as we're looking for trend continuation, let's preface this a little bit on where we are time-wise. I think this would be the appropriate channel. So the 2021 high here is going to be extra important in my opinion going forward. The main reason being is as we start zooming out, right, you can see monthly is not really giving us a ton here, but you can see we've never really lived above it on a monthly schedule. So we're going to go out just a little bit further to the quarterly, which does end at the end of the month. So June is the end of quarter 2. This is obviously quarter 1, but this was your all-time high, 2021 highs, right? You've come up above the level. You've given it up. However, this wick has had a decent buy up. So nothing is broken. Bitcoin's obviously just range bound and has been for quite some time. If you can recover 69,182.50 and live above it, at the end of June, like let's say price fails to break down, price is failing to move into this, zone of the chart, putting in a base, doesn't ever touch this area and it bases here and it recovers that 69K level, you have to be looking at the idea that things are starting to shift and that this trend is very likely to continue, right? Things would look pretty good if you closed back above 69,182.50 at the end of the month. I don't think there's too many people that would argue with that. People lost their minds when it pumped to like 69K this last week. Imagine if it hung around here, didn't dump any further, even if it did dump, $1,000 lower, who cares? But it recovers 69,182.50 and it's living there by the end of the month. This candle starts to kind of look a little different. And the change of behavior from this all-time high being resistance looks a little different as you closed above it, opened above it, dipped below, and then if you can open back above it and close above it for this quarter, close above it this quarter, open back above it in quarter 3, is that a guarantee we're going to all-time highs? No, but I would start shifting my probabilities that, okay, bulls are definitely in control. I should be looking for those higher targets. On the macro, this is actually a really good chart of where do I get bearish on Bitcoin. And below 58K is like the first zone. You can see that's where your settle up is here, but it's also a quarterly pivot. It's a very, very simple region of the chart. If you're in the group, yeah, right here. Actually, is it a quarterly or is it a monthly? Yeah, it's the monthly, like at 55. So you can see right here, this was an untapped monthly that pretty much got tapped right here. I consider this tapped now. this is a monthly average from March on our move up. And so you would then be taking your averages, and your averages are now averaging down. They're no longer averaging up. That doesn't look fucking good. That's it's a monthly average that's not dynamic. So it's just a straight line, high, low, close divided by 3 of that price action in that session. And they've been averaging up. If you were to take those averages, what do? They're increasing with price. What happens if you start losing those averages? Well, it's a pretty big sign of weakness. It's not good. So you would want to see it get continuation. Now, the other thing that you'd be paying attention to, so again, we have our 3-month chart here, just as we were discussing, and we said 58K, right? So if we're looking for, in terms of like, when does this range look like shit, 58K is probably pretty close to that level. If we go to the 2023 closures, so these are yearly levels that I gave the group at the beginning of the year, and I'm gonna get rid of the highs real quick here. And I'm actually going to do this because I do want to come back to these in a second, but I'm just gonna put them at the top. So these are levels that were given to the group at the beginning of the year, generated these. We now have an indicator thanks to Pippi. A guy in the group, again, took some stuff that I was already doing and just kind of made an indicator for everyone in the group. So if you're in there and you don't have that indicator, please let one of us know so you can have it, so that you don't have to do this stuff by hand. But I generated all these by hand initially. These are just standard deviations of price based on prior session data, and then extrapolated for the next session. In this case, we're using 1 year. So this is a very high time frame session. But you can see below 65K, there's nothing between you and 59, right? And you can see that there's been no price action here really for quite some time. So you are setting up a very flat bottom of support. And when you do that, you can get pretty big moves down. Just like you had a flat top of resistance, what happened? Boom, straight to the next level, right? That's exactly what you're looking at here. So we talked about how there was no price action here when this was happening. We said it looked very 2021-esque in the summer right here, except in the summer this got continuation. But we said if you were just trading this as a range in this region and you were looking at it as such, right, what do you notice right here? There is no price action, okay? This is just people going into the low. And then as it's reversing and starts reclaiming this like area right here, it's a very fast move to the top side of the range. And we just saw something that you could say was equivalent in our current price action. Okay, so this was the range here, right? We could very easily just do the exact same thing we just did. And we could just say, yeah, here is my range. What happened when we reclaimed the EQ, aka 65K, went to the top side of the range. Now we're back to the middle of the range. Nothing is broken. It's just, this is price action that people are getting very emotional about for no real reason, in my opinion. But if we lose 65, and I do think that you could have a wick basis to 64, yeah, I'm looking down to like 59,000. I know there's some support here right around like 61.4, but 59,125 to that 61.4 range is where I'm going to start looking at the idea of taking positions in terms of my next trade if I'm looking for like longs. Very, very simple. Very, 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 very simple, right? Now that same information that we just took for the yearly chart, I actually have extrapolated that on the halving for people. These are halving data points. And so when you look at these are good for the next halving cycle. The last halving cycle was actually pretty good to us. So it would suggest that if we give up the VWAP, which you can see we've done this before on here, we would be looking for a little bit of downside. However, traditionally, it doesn't mean that the range is broken just because you lose the VWAP. It just means you're going to the bottom side of support. And then it reclaims this VWAP and eventually just becomes a very, very key level for price to interact with throughout the duration of that cycle, right? Again, right here. So we would be looking to duplicate that again in terms of just relative trading levels and ideas into this one, volume weighted average price anchored to the halving. So that's where these levels also come from. They come from that halving time frame. So they work together, right? So you have the +2 as resistance right now. It's been very good. Looking to see if maybe we come back to what? And we just said 55 at that monthly pivot was kind of the key level. Can't lose this area. Well, I mean, it's letting you know right there. I think that you could, just like we moved down our high time frame closure to the upside to 60, what was it, 69, 182.50, the prior all-time high. We could probably move our, instead of having 55K right here, right, instead of having this as being like our kind of like really big invalidation, we could probably start moving that up to like 60K. But if we lose 60K, then yeah, we're probably going to start looking for that body check down into the 50s in this area, maybe lower. And that brings us to those levels we just deleted, right? So when are we really in trouble? Well, these are yearly levels. I've been doing a lot of high time frame analysis for many years for you guys on these channels, both on TikTok and YouTube before that channel was lost, and then back again on YouTube. TikTok for quite some time, grew that one to like 60,000 subs fairly quickly. No one's really does charting this way. I mean, some people do. It's just I don't know if they explain it properly. But, you know, when you look at this, again, the 2021 high, we talked about closing the quarterly above. This yearly candle looks pretty fucking good at that time, doesn't it? When does the yearly candle look really bad? We kind of talked about using the 55 to 58K range. So if you go back to that quarterly chart, like right here, you could very easily just box the region off, right? You could just say, you know, what is that? 58, right? So that's pretty close to that 59. What was it? 125. And then we had, what was it? 55,000, which is essentially just the low here. You could just say this is probably going to be the area of the chart that I really, really, really need to hang on to. Oh, my magnet's not on in this case. Something like this, you know, we're not reinventing the wheel here. That, yeah, I mean, below this level, and honestly, there's almost nothing between you and 48,207. Again, hollow price action for a long time, back to the top side of the range. You lose this level, and yeah, you are kind of looking back into this region of price. I know that people are going to be looking at 50,000. It's a nice psychological level, but I do think that this like 2022 high kind of just starts to creep into my mind a little bit. Really starts to make me think that that's where we're heading. And then this is just this is just a modified fork to show you guys like a channel. And it's not based on these lows. It obviously cuts through a low here. We're looking at if price were to continue a trend in a linear fashion, can we extrapolate that and then add, median lines? And that's all you're doing with this. You're not doing anything too crazy. And you can see you almost ran a 1-to-1 move. Like you're very close to a 100% to 100% move. And 1-to-1 moves in Fibonacci, trend base wise, are, something that you would be looking for. So it got pretty close to that. It was very good. So this consolidation will be very important, because if it does recover the 2021 high on a material basis, we're going to get those higher values. If it doesn't, we have to start looking at this, in my opinion, from a left translated cycles standpoint, meaning that this occurred very, very fast. And as much as people want to see 100K and maybe more, they might not be getting that. And this is something that I've been talking about for quite some time, since the halving started happening, where we were that far into our cycle as far as price goes, because this was our reversal pattern. Obviously, this is our low over here from the last cycle. So in terms of time, you want to know if this is my reaccumulation pattern that I'm basing some things off of, like this, right? You can see that I'm basing my trend off of this pattern. I'm using the COVID low, not the all-time low. They are separated by time and a fair amount of price. This thing gets it pretty good. I'm just using this for a trend. This is something that I do with harmonics myself, as I like to apply pitchforks to the major pivot points to just get a trend and get an idea of key levels I'd be looking for. And so these are things that as soon as I have this harmonic, I usually put this entire folder together, including this right here, right? And this is my trend-based tool myself, where I do, again, instead of taking a time basis on this one, we take a accumulation basis, where we're just going from the beginning of the accumulation pattern here to the end. And we're saying, what would it look like if I used some deviation data rather than standard linear data to give me roundabout areas where I'd be interested in price. And you can see it's pretty fucking good. Is it perfect? No, but it's going to give you a pretty good idea of where you should be trading at. And then you can use other technical stuff to go through. So if we're at this point of the chart, we know that these are kind of our major key areas to hang on to. If we were to box them off, and I do want to do that before we get too deep into this, just because I think it'd be important for you guys to see this extrapolated against price action on a lower time frame, like so. And then we'll go to back to the weekly here, and you can kind of see why we want to hang on to this box, right? Nothing good below here for us. There's a lot of stops to be taken. So, price isn't in jeopardy of losing this box right now. I don't want you guys to think I'm dooming you out of the market. I'm just letting you know how to read a chart so that you can make a high time frame plan of if then. So we may never even see this scenario, and that's okay. You're not trading for that. You're trading what's in front of you, and what was in front of you was a short. So when I held my short from 2022 all the way through to the bottom, it was because price never did anything to change my mind. And so if I'm in longs from 16.6. I didn't get the bottom at 15.4 like a lot of people. I did get 16.6. And so I've been sitting in that long for a long time. It's one of the highlights on my Twitter channel. I even made it a public announcement that I wasn't closing that long when I took it, just so that everybody knew. And it was very similar to the position I took over here. So what would change my mind about that position and probably continue? And what I really want to emphasize to you guys about these positions is they are leverage based. Some of them I think are 11x and 6x. You guys have to understand, I trade inverse perpetual. And so as the market matures and you see me taking these profits, I'm not actually exiting Bitcoin. I'm actually closing back into Bitcoin, but I'm deleveraging. I'm getting leverage out of the market, because as this market gets more mature, you don't want to be over leveraged in that market. It's not good. That's how you should be treating leverage. Risk down here was substantially lower, right? So we had a good setup. You got your leverage play. Now you're deleveraging into this rise. That's all you're trying to do. But as you're doing that, you have time to think about, right? So how can we look at time here? So when we look at this, it's a very symmetrical pattern, just like we had a very symmetrical top where it was the exact equivalent of the last bull market in time to this high, right? You have the exact same thing here. I believe it was, is it XAB? No, it was X to B. Let me do this. This is your time basis, right? So you can see the one-to-one's very close to when we completed here, and then you can extrapolate that out if you want. You can start looking at things, and it gave us this high right here into the gold pocket, which was a nice 20% move down. Okay, so you can see how time starts to play a factor, and it gave us a pretty good idea of when we were looking to potentially get long in this region. And there were other time pools that gave us a zone that were for like the late November, early December. How do we use this information for our current market to determine if we're in a pivot point in the market? So again, we've taken the length of our accumulation pattern here, in this case, X to D. So I'm not using any other pivot points on this. I'm not using A, B, or C. I'm using X to D only. I just want to know what is the length. So you would take this tool here, which is and this is a trend-based fib time, and you would literally go from X to D, and then you'd have a third point to select. You're not going to select a third point. You're just going to double click that last point so that it's extrapolating in Fibonacci sequence the length of time from this low to this low, and then giving you data points to work off of. Because most markets work in cycles, as you guys know, and cycles often repeat. Okay, so that's why one-to-ones, when you pull a rubber band and it has to come back, it oftentimes rhymes, right? Because buyers and sellers don't really change, and markets are very cyclical. Even our presidential elections and our government and our finances, they all work off cycles. They all work off time. So it's very important to understand that concept and not overcomplicate it, right? So we have a 50% mark coming in here, and we've done something we've never done before. And that's just based on our current accumulation pattern, right? So even if you don't buy into harmonics and you don't care about that, you'd say, okay, well, I don't want to do any of that. Well, that's totally fine. You now have what I call macro time. You would be taking this from this impulse from here to here and then over, and noticing that you're at 200%. So we're getting pretty extended. And then you would look at it from this zone. Okay, so now we have our all-time low, we have our all-time high, and we have our new low for the cycle. Okay, so we have 3,000 to 69K back down to 15, and it is what? It is an exact 50%. Where is this? 50%, right? So if we look at these things together, we're entering an area of time where we have two time pivots. We have a massive resistance here at 73K, which I've shown numerous times in lives on why it was and in the group. I was showing that resistance all the way back in this region. I had a box there for it back here. And it doesn't change anything for me. That was still going to be resistance from a Fibonacci standpoint. So you have a massive time pivot coming in. Traditionally at the halving, we have, in the last one at least, we went sideways for a very extended amount of time against resistance. It wasn't all-time high in this case, but it was resistance nonetheless. And you're doing kind of the same thing now. So is the bull market over? No, but you have entered with a very overextended and quick accelerated move into some time pivots that to me are important, also into some highs that are important. So is that a good place to, say, all right, bear market's here? No, but is it a great place to look at maybe deleveraging out of the market or even taking a hedge? Yes, and when I say that, I mean, like, your hedge might get stopped out, but it's just a fucking hedge. It's not meant to, you in theory, you're not selling all your Bitcoin up here. You're just maybe taking some of the leverage that you're exposed to the upside and removing it from the market. So let's see, what do we got here? I need to jump back in the chat. Oh, there's Max. Hey, what's up, man? You've met Pullmans and I've met Max. I posted. Oh, I see your charts in the Discord. I don't know why I didn't. Yeah. I never bailed on it as we never made official plans. I don't know. It sounds like you bailed to me. Black is nice, I'll say. Max killed the gold pocket. Yes, he did. If stocks pull back next week, it's over crypto boost. I wouldn't go that far, but it's probably not going to be good for him. B&B. We'll do B&B. Richard and Scorch. What's up, Scorch? Scorch with an 818. That dude's a legend. Also known Scorch for many years. Anyways, that's a rundown on time and price. And I spent so much time going over that, 47 minutes. I am so sorry, guys. That said, somebody asked for B&B. So if you guys want to look at other things outside of Bitcoin, or if you have specific questions about Bitcoin, all you got to do is ask. XRP Hank in the house. That dude had some pretty good content. I'm not going to lie. I enjoyed XRP Hank quite a bit. So if you guys haven't gone over there and watched some of the videos he did put out for a very short amount of time, they were gold. That said, B&B, we looked at this one a little bit last night alongside like Rose and a few other ones, talking about trying to find a short in this region if it gave it. And it looks like it's going to kind of give me the cold shoulder, but that's okay. You don't always have to get every trade. I don't know why I'm searching for the B&B chart when we both know that nobody should be charting B&B on anything but Binance. So if you're looking for the exchange with the most history and the best history, Binance. B&B, this is one we covered last night. A very interesting chart. I think Matt had requested this one initially last night, but it was on the monthly chart. And, it's an interesting monthly candle because you do have, again, resistance to the upside here. This resistance is just the all-time high. And then just like the, monthly, it's hard to see it here, but I'll zoom way in for you guys. You had an SFP. Okay. So that's all we've done. We didn't use the bodies. We used this guy. Okay. So you see how there's an SFP here, right? So this is your resistance. So if you wanted to, you could put a box. If you wanted to put two separate lines and label them, you certainly could. You could very easily go that route. Whatever is easiest for you, you could just say, and I label these myself, my system is MSFP, which is monthly SFP, right? It's a system that's made for geniuses. You'd have to be extremely intelligent to understand why we've named things. No, I'm kidding. Just like this is all-time high, right? And if you want to label it in your object tree, for anyone that's at home and doesn't know how to use TradingView, you can just do that. And guess what? It says all-time high up here now. Pretty sweet. Pretty sweet. So anyways, you have a monthly swing fail. We've not closed a monthly above this level. Every time we've gone above $638.60, it is never closed above on a monthly basis. I don't know if that applies to the weekly. It does not. But the monthly is pretty powerful. It's a common time frame, and there's enough price action on BNB to justify using the monthly, because this goes back as a pretty old crypto. So you've swung fail effectively the all-time high. Now, this candle has not closed, so you do keep that in mind. That means that if price was to start recovering 638.60, that, you know, maybe we have to reconsider our thought process here. But in reality, when you do something like this, I would just be looking to go, where's my range? Did I do anything unique up here? So we set in a range like right here. Okay. And there was my low. And you could use a channel if you wanted to, but the real reason I wanted to do this is, actually, we'll just use expansions. There we go. Okay, so if you were looking for targets here at the all-time high, you could see that you're coming into resistance just based on some standard fibs plus your all-time high. And then once you closed below the all-time high, you kind of had to know you were coming back to backtest your base here, or your old resistance that you grinded up against. And now you've re-entered this ascending triangle, which I'm sure everyone and their dog was looking at, like this, right? So everybody was probably looking at this, and this is an ascending triangle right here. All the pattern bros were probably creaming in their pants for this trade. And you've had a false breakout, and now you're back in the triangle. Typically not a good sign. The old school stock dogs will call that a false breakout or a throwback. We refer to them as swing failure patterns. They are one and the same in most cases. So riding a low leverage short from the new all-time high, and that's on BNB. Good for you. That's a good trade. Now let's figure out where you should be taking profits. Periodic volume profile is going to be one of our best friends here. We're going to go out to the 3-month chart. Yeah, quarterly chart. So you can see we are hitting the point of control of our quarterly chart for this quarter, which is over. So, you know, if you think about it, and they're 3 months long and we only have 2 weeks left, you know, so that makes us about 80 to 85% of the way through the quarterly. So pretty good information here on this range. It's a fairly small range, meaning that when it does resolve, you're typically, when you have small ranges like this, you usually get a big expansion. So if this continues to consolidate up here and not break out and eventually break down, you're going to probably fill this big guy in. And we'll see much lower prices on the asset after it makes an attempt at an all-time high and fails. That would also imply Bitcoin probably not doing good things. So if Bitcoin's doing good things, throw that whole idea out the window. But we were talking about last night, where would we start to look to try to get along at on this asset? You know, you can do some really basic things. We can do things with time. We can do things with volume profile. You know, it really depends on whatever you're comfortable with. Like this is a monthly right here. As you can see, they are just getting smaller and smaller. And what do you notice? That was the ascending triangle. Most people don't realize, and I hate this. I saw a guy that said it. I think he makes good content, but I just think he's pandering to people. He's intentionally pandering to people and saying things that I don't think he realizes aren't true. But he made the comment about volatility, and he's got a volatility index, and when it gets super low, blah, 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 blah. And like, you know, what is volatility? It's when price isn't doing anything. Volatility super low. I mean, yeah, that's the nuts and bolts of it, I guess. But in reality, what you're looking at here is a buildup of positions. Okay, so you're looking at people build up longs and shorts, and it is a matter of open interest at that point that's building up on both sides or one side of the market, and eventually that open interest is capitalized on, washed out in most cases, sometimes both cases, right? And so that's how you end up getting these really dull periods of volatility, is you just have a massive amount of positions that are now building above these levels and below these levels that lead to big liquidations and washouts of the market, et cetera. And that's how you end up with, you know, patterns. The way he explained it, I don't know. It just made me kind of maybe cringe a little bit, but like you guys don't need to know that stuff unless you want to get into it. Like that's stuff that Max teaches, but it is important to kind of wrap your head around a little bit. But anyways, I digress, right? So looking at the monthly volume profile, this is a periodic tool that's available on TradingView. I do believe you have to have an upgraded membership for it. You can see that you've got 1, 2, 3 points of control in a value area low, all right here. And that if we lose this area of the chart, we have nothing but fresh lows again to be taken. 1, 2, 3, 4. And even this is a higher low still, barely, right? So you can see that these lows are then probably in jeopardy of getting cut. Okay, so you do want to hang on to the zone that you're in now. So you are at support. You're at the overall range point of control, most likely, if we were to, go in and take this out and then just look at this from a structure standpoint or even a yearly standpoint. I'd be curious to see where the year is at on this one. I think we did that a little bit last night, and that would be here on over. Yeah, it's your yearly value area high. Perfect. So really kind of confirming what we just said, that if you lose this little box here, these points of control that have been accumulating over the past 3 to 4 months, alongside the value area high of price action in terms of the entire year, yeah, you're looking to probably come in and start taking some of these lows, but then you've worked yourself back into a pretty big range. And that if price can't find its footing in this $500 region, it's, the idea of $300 is certainly not appealing to some people, but they would have to really be kind of, depending on their positioning, they might be sweating a little bit, right? You might start sweating. So one thing I will add though is this is support. You are coming into this gold pocket right here. So there's a gold pocket at the value area high of the yearly value area high. There's a gold pocket at the yearly value area high at these points of control, like on the quarterly we just talked about. I'm going to go ahead and actually put this back on the golden pocket template so that it's just a little bit cleaner for you guys, and recover what we just talked about so that it's not as confusing. But we're going to use that periodic volume profile tool, and then we're just going to go in and up the months to 3. And you can see that we're going to get a little bit more high time frame data here. And you can see that this is our point of control. This is the value area high here of the year. And that this would be kind of a key area to hang on to. And you could probably extend this down now a little bit and just say that this is an area to take longs. If those longs fail, this is something that I would be cautious and wait for the bottom of the range here and really try to kind of figure out what's going on in the market before I just jump into buy the dip on an altcoin. Personally, just me. But I'm a very cautious altcoin kind of guy, a little bit on the standard missionary position side of things, I guess. We don't do anything too crazy here, but what we do works. When it's working, it's good, right? Belly to belly is pretty good in the words of Shane Gillis. So, yeah, I mean, this is a very simple chart. If you break back above 638, though, I mean, why wouldn't you try to make a new all-time high? The only thing I would be aware of in that instance is, if this was the low, I'd just be aware, where's my gold pocket? Okay, it's up here. Always something to have on the chart. It's pretty close to the prior all-time high. Just know where it is, because there is going to be resistance, of course. I'm assuming that probably comes in somewhere in the vicinity of the current monthly volume profile. Yes, it does. Okay, so if we're looking at this from a monthly standpoint now, getting it's not very granular, but let's say that this is the low and we get that bounce to the gold pocket, and we said you have to be aware of it. Well, this is your monthly value area high, and the monthly ranges are pretty good on most assets. So it doesn't mean they're going to be perfect all the time, but this is a pretty good area to be aware of. Okay, so if this does bounce and we get above 638.60, don't just say, well, we're going to all-time highs. Be aware of 671, probably up to 681. That little like $10 zone here is kind of the territory you'd want to be taking a look at in terms of a trade. Not saying it's an automatic short. I'm just saying I would know it's there. I'd be fully aware of that region. I don't really think I have anything else on BNB. If you could multiply your likes, you would. That's okay. I'll get this channel up and rocking again. There's not too many people that can go through a chart with every tool the way that we do. And we have some really unique things in the group that I'm the only one in the space doing, and I know that. And if anyone else is doing it, they literally learned it from me. And I don't mean like I repurposed, order flow information like some of the groups out there have. It's things that I've actually come up with. And I've even borrowed stuff from other people, and I'm not afraid to admit that. And I always give them credit when I teach that in my class. I didn't actually come up with this. It's just, it fits into what we do really well. And so I always kind of give credit because, you don't want to be that guy. But there are some things out there that you won't find anywhere else, which I'm pretty proud of. But unfortunately, being proud does not pay your bills. So don't forget to trade well and safely. I don't see anyone else asking for other coins. So let's take a look at whatever just pops up. Solana is a popular one. We just did one on BLZ. I'm going to do Fetch AI as a chart build. So I'm going to take Fetch AI on Sunday for the group. And the members in there will basically, usually I do it on Sunday afternoon. I guess it is Father's Day, but it's fine. I'll celebrate Father's Day, but then we'll do Fetch or FET. I'll just go from a blank chart all the way to a trading thesis. And, to give you guys an idea of some of the ones that we have done in the past was, I think we did we do Algo? No, we didn't do Algo. We've done XRP. We've left a lot of these like old shit coins alone. This was a good one right here. So this was a setup that we gave ages ago. I don't even remember when we gave this, but it was well before we got to this region, and we had it timed out. This was the box of time that I gave, was this one, which it hit pretty much to the T. And this was the zone, looking for the quarter one low into a really, really nice crab harmonic. And then we were looking all the way down to this B leg right here. So we had a pretty good run on some of these, right? Yeah, all the way down to here, bounced off the B leg. And we've come back up to the 2024 open, which, as you guys saw, I wanted to get a short out of this region because you have the 2024 yearly open. You have the prior year's high here. And then if you turned on your fibs, you have a nice gold pocket inside that region. And I believe I've been wrong before. Was there I feel like there is something else up here. Was it an NPOC? No, it wasn't. I don't remember what was up there. Maybe it was incoming pivots. Let's take a look. Nope, definitely not. Anyways, this is a region I'd be looking to take a short out of if reached at the right context. Like if it just came back up here right now, yes, especially if Bitcoin's still looking weak. Bitcoin's breaking its prior all-time high, though, on like a quarterly basis, and this is coming up to these levels after a reaccumulation period. I'm probably not looking to just jump in blindly to shorts. Just you kind of got to use your head a little bit and be like, maybe that idea isn't such a good idea now. It's like it's a novel concept, but people just fall in love with these like trade ideas that they have to be correct, and that's just fucking, the downfall of many traders. Unfortunately, that's all I'll say. It's downfall of many people in many walks of life. Link and Render. Is Render like the cryptocurrency version of Grinder? All of crypto is basically just Grinder. Let's be honest with ourselves. It's just a bunch of dudes talking to each other on the internet about fictitious money coins and sharing memes and sexually harassing each other. Link is one of my favorite charts because it's a really easy chart. I actually thought it was really fun to do this one because this is Link versus XRP. I gave this on Sin City. You'll hear me say that a lot because they've been one of the bigger channels that I've been on here pretty consistently for several months now. But you can see that the 2022 high was kind of our target for a Link versus XRP pairing, meaning that we were looking to measure how many Links versus XRPs you had to have. So you had to have 38 XRP to make one Link at one point. And that was the 2022 high. What'd you do? You swept it. And we said you'd come back down to this level. And over time, you would expect Link to outperform XRP and come to this target just based on the chart. But that's when you knew that you should be getting out of Link. And this is when Link was making a high and XRP actually rallied to 75 cents from like 47. So it's kind of funny how that stuff plays out. But Link USD, right? So really obvious pattern here at the low. Fucking took forever, months on months on months, over a year actually. Okay, so you had a really nice bottom being put in here. It's pretty obvious when we look at it in hindsight. You're just back testing the only consolidation that was available. Me being the dumb fuck that I am, I started dollar cost averaging into Link at $11.30. And so my average is not as good as I had liked it to been, but you know what? We made some money. So again, going to Link, if we were looking at this on a high time frame, and this is the level that was given in the group, it was one of the first trades setups that I gave was a Link short as we approached these levels. Believe it or not, this was kind of a region that we were looking to take some trades out of, and you did wick through it. But again, if you're paying attention to things on a time basis, now we're looking at monthly. We could go to quarterly as well if you wanted to, right? Things start to look a little better if you have a system in place. We're using time as our kind of our anchor point. You can't have constant variables, but you can cycle through time frames if done correctly and start, getting a plan and being like, oh man, yeah, that makes sense. And this doesn't look that good. It looks like it wants to come back and test $9-10 if you want to know the truth. This is just a consolidation, obviously, but you're putting in a lower high, and if it starts to make a lower low, you're gonna back test this support, and I think it will be good support again. I don't think it's nuking to like $3 or anything, but it's probably what you're going to be looking at. And I believe now, this was the reversal pattern off the low. So when I was running this in the group, I had a pretty extensive write-up on Link and why we thought it would at least take the highs here of A. It's been a little bit since I've had to look at that, and I think I deleted it, which would make sense. Because it was like the June low. Well, this is why I don't like to delete things, but doesn't matter nonetheless. We can kind of go from here. All right, so the theory behind this was this. Actually, we'll just cover it like so. Okay, so this right here is not the high of the range, right? This is the high of the range. You see how you left the high? You guys see that? Let's get rid of this. We have completely left the high, which is very uncharacteristic of most assets in this market because they're all liquidity driven. And I hate that word, but it's very true. We're all just trying to fuck somebody out of a position. Just got to, dump it to pump it, guys. And that's essentially what we're talking about. Now you have your low and you have your high, okay? What did you do? You didn't take the high, but you did take the low on a harmonic, which is, for anyone that's curious why this AB equals CD is so great is, again, we talked about symmetry earlier in markets, and it's a fucking perfect one-to-one, right? Perfect one-to-one at a swing fill of the overall low of this entire drawdown that's been going on for since May of 22, and this took place in June of 23, so 13 months, and you get a swing failure pattern at a perfect one-to-one with a perfectly symmetrical AB equals CD reversal. Like, yeah, man, you're taking that. Like, you have to. And you got this. You went and took the high, which was predictable. And it didn't even pull back. It just shot through it and went straight to what? Our resistance zone here. And that's kind of where we're sitting right now, waiting to see what's going to happen. Right. So when we look at the yearly range here, not much to really say. Got to have the point of control, of course, around $18. And then this looks okay, where it's like, okay, we're just trying to make higher lows, sure. But realistically, it just hasn't done that yet. And with Bitcoin looking the way that it is coming into support, of course. But, we want to see what's going to happen there with that. And if, Bitcoin support gives off a failed bounce and it goes lower, this one is most certainly going to come back into this region of the chart probably and back test this range, and then you're just looking for confluence in levels, to be quite upfront with you. We could keep it very similar or simple. This is something that I didn't come up with this strategy. This is someone else's, but it's very, very simple. It's very easy, right? So you guys can all wrap your mind around this. Okay, so you have your monthly closures right here. Okay, so I like to mark these like this, and daily, weekly, monthly, and we'll actually keep up in the object tree on this one. So we have a monthly level of support here, which you can see this would make sense because there's a lot of settling up here where price is not moving any lower on a quarterly basis, excuse me, not monthly. Go to the yearly chart now. What do we have? The exact same thing. Okay, so now we have a yearly level here. And I actually have that as my template. I just need to change my object tree. So now we have two levels, both a 3-month and a quarterly level in this region. Plus, if you wanted to, you could just throw in the 2019 high. Occasionally, I'll do that as well. And you have the 2019 high here. And I like to mark those in white. And we'll do that in a second. But, you can start to kind of build out your low pretty easily. We're not doing anything crazy. We're not reinventing the wheel. It's funny, when I had my old channel, I used to play the Bob Ross music at the beginning of every episode because people were like, "Look, the Bob Ross of crypto." It's just, no, man, we're just painting happy boxes, bro. Just happy trees. Okay, so this is where your support is. If you start breaking below these lows here at like $12, you're probably going to back test the top side of the range. But realistically, as we start cruising out on the time frames, probably coming down into that box. You're probably going to cycle this range and back test your support. And then we can start really getting into, okay, if that happens, where's the market at, first of all? And two, this really does have to be support, right? And now you can start going into your periodic volume profile and just starting to kind of add a few layers, if you will, where you could say, well, let's see what we've got going on the weekly time frame. Do we have any naked points of control that I should be aware of, other volume targets that maybe would aid us in some of the ideas that we have down here. And so you can see that it doesn't go back far enough on this one. So what I am going to do before we get to the monthly chart on this, I'm just going to add a week and see how far that gets us. Again, could we SFP this level like the $12 region and it could hold? Yes, there is something here, but I would be cautious on that trade because realistically, you're looking all the way back down to what? $6.62 according to the biweekly. If we were to take this and now turn it into a monthly chart and look for monthly levels that might be out there, again, $7.62. So really kind of supporting the idea that below about $12 is not good. So things are fine right now for Link, but that can change, and we should be fully aware of that because, well, if we're not aware of it, we're just blindly buying a downtrend is not a good idea. You always want to have some rough idea of where you think you should be getting involved in the market. You don't have to be exact. It can be a pretty wide zone, even if you're just buying spot, especially, and that's what I'd recommend. But you can certainly do better than just being like, I feel like this is cheap. Because that's what people do. They're putting their money into the market, especially cryptocurrency, and like, I feel like this is a good price. All right, then let's just put all our money in there. But again, looking back at this, at like that 762 is what we just talked about, where that monthly point of control was. Look at the value area highs from quarter two, is this a monthly? Yeah, this is a month. So no, this is the quarterly. Yeah, this is quarterly, right? Yeah, these are quarterlies. Sorry, I don't know why I didn't remember that, but yeah. So quarter two, quarter three, quarter four, 9 months worth of price action. The one standard deviation value area high is literally the exact same level on all of them. This little box right here could very easily be an area that you'd have to have as well, right? So you could just say, okay, well, I don't want to guess, but this is pretty good. This is a pretty good indicator. If we extended that to the left and the right now, you could just take a look and see, does this level have any weight whatsoever? Yeah, it turns out it kind of does. This is a good level. It makes sense. You could even make it wider. I don't care what you do. This could be all one buying level for all I know for you. You could just be buying all of this shit. You just be like, this is my entire buy zone between 780 and 480. And you're okay with that because your average is going to be somewhere in the middle, right around $6.30. So, to you, that might be good enough, especially if you're a spot holder. You're just really banking on that this isn't going to go any lower than what we already have right here at this current support that we've kind of set up, right? I mean, that's what you're banking on. But yeah, Link, it doesn't have to come back down to this zone, no. But if you start losing these lows, yes, it's probably coming down into like the $7 to $6 region, and that's the next big opportunity for me on that one. Otherwise, if it was a local thing, I do what I always tell you. Pull up your monthly averages, pull up your quarterly averages. Where is everything at? Where are we coming in at on the incoming averages? Where's my new quarterly and 6-month level coming in at? Where are these coming in? These are going to be levels that we need to know about as well. They're all showing above us. Not good to generate below them a lot of times, by the way, guys. You don't want to be living below the average of the prior session. It means that you're starting to trend lower. It's not good. So yeah, back above $16, $17, things start to look a little different, which if you really wanted to keep it simple, you could just say this looks like a head and shoulders, and that if you wanted to be bullish, then you want to recover this area of the chart, right? You want to recover this, and you can see the SR flip here. You can see that this is the left shoulder. This would be the right shoulder, which is already a little higher, but if you were to come back above this on a higher low, then yeah, this looks like it's going to try to probably make a new high and head to like $27. But until that happens, I'd just be kind of cautious, right? I mean, you guys aren't going to get a whole lot of me telling you guys just to buy. I know that's not very fun, but I would rather you guys make methodical purchases. Like you're at the gold pocket here, but I feel like you could easily come through this a little bit further and just at least get the POC of this current quarterly range, and maybe we need to dumb it down a little bit to like the monthly and see what we've got. You're at the value area low. I mean, you're at support. If it comes back below this even a little bit, that's okay. It's not the end of the world. That quarterly POC we just discussed, it doesn't have to be tapped in this region. You've got enough here, but if it does and bounces, I wouldn't be scared of that trade. You've got enough there, because if it came down into this region, you can see your averages, which on Bitcoin, these averages hit at a 70 plus hit rate. I think it's 73%. So if you came down into this region, you're just looking to trade this back into these averages realistically back into like $16 and then see what happens, right? And then you're just kind of, am I going to hold this trade or am I going to get stopped out? Make sure I take some profits, yada, yada, yada. Same with this right here. If you take this long in anticipation that it won't come down here and make a new low, that's fine. But I would definitely make sure I know where I'm getting at least a take profit at, unless you think that this is just like the best buy, the dip opportunity ever. In which case I would say, man, you're going to have a real bad time when the bear market comes. AZ, oh man, you only trade breakouts, bro? Come on. Monero, I struggle with Monero because not because it's the chart, but because of the premise behind Monero is really good and I like it. It's been banned and it's so kind of shunned and looked down upon that it's tough for me to see that one gaining any traction, and the chart's not really showing me that it will. It's kind of just saying that, oh, my EXO chart's renewed. Just got my bill. Thanks, EXO, for taking my money. Yeah, I mean, it's tough for me to get behind that one. I want to get behind it. I like it. It's my type of crypto. It's just I don't know, man. Then we could always go to the handy dandy next generation of trading. If we really wanted to keep it stupid simple, I think is what is it called? The KISS method, guys. If we really wanted to do this, you could delete all that shit I told you and just trade these levels. These are the levels, the same levels I told you I calculated by hand and I showed you on Bitcoin. The exact same levels on Link for 1 year now, and we just have an indicator now that shows you how to get those without having to do it by hand. And you can do it based on aggregate data now, which is really cool. That was something he added for us. You can use aggregate or you can use the exchange you're on, which this is just Binance. So you can see the levels change just a little bit. They don't change much, but aggregate's pretty good. It's using multiple exchanges. So it's going to get you a little bit broader picture in terms of level. But, are they perfect? No, but they're pretty good. You want a long here, take profit here, right? Looking at the levels, just where's my range? Low, high, came back to the low side of the range, made a higher low, of course. Where'd you go? Range, back to this level, back to this level. It's kind of in limbo now. But if it rejects here, what are we looking to do? Well, we're looking for that 1196 region we just talked about. We're looking for these lows to maybe get swept. And if this area of the chart is lost, what did we say? We said population, not good is our operation, town, I guess, is probably underway. Pretty obvious. We've been live for 80 minutes, and there's 20 of you in here, allegedly. 20 of you in here and 15 likes. Thank you guys for the likes. I'm not going to ask you to like the video because I just don't care if you do. You can dislike the video, and that actually also helps the algorithm. Believe it or not, I'm incentivized to try to get you guys to engage with our video. I don't like doing that. If you guys do like the content, do whatever you want. I don't really care. You can leave a comment afterwards. It's a public comment like, this guy is a fucking retard. Excuse me, is a not intelligent person. I don't want to use that term on YouTube. You just like, this guy is just not good. That wouldn't bother me at all. Or you could say this guy's just blowing smoke. All that stuff. I don't care. Do whatever you want. If you guys are interested in anything that we went over, I covered a lot of things, just kind of like talking, getting used to being back on camera for you guys and going through the market. Also, it's just a nice refresher. The Discord's always open. Discord link is in the bio, blah, 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 blah. There's other things down there as well that if you're serious about trading, you'll probably end up using. So you just get discounts on. But if you don't want to use our link, that also doesn't affect me. I'm not really trying to be a shiller, but at the same time, this is what we do. We have a good time. So otherwise, for most of you that are in the chat, I'm pretty sure you're in the group based on the conversation. So we'll see you guys on Sunday, and we will be looking at Fetch. We're going to do a chart build on that one, look for a trade setup if there is one, and start to finish from a blank chart to a high time frame thesis and trading plan. So yeah, it is stupid cheap. We recently cracked 100 members in terms of the premium side of things, which was really nice. We don't make any content up until now, so very impressive to see that we get that kind of a following without making any real content. But it did push the tier up to $22 a month, and I know that's heartbreaking, but it is one of those things where that is just me and Max, and so the more people there are, the more I have to throttle it back. I did a free one a long time ago and ended up with thousands of people in there in just a matter of weeks. And that was a disaster for me because I was the only person actually in the Discord working. So that was kind of a nightmare, but it was fun. If you guys remember, there's like 4 of you in the chat. It was called Sausage Party. I remember you guys remember that one. That was a good time. But anyways, I'm going to hop off, guys. It is 11:59. It is midnight. I am about to turn into a little gremlin and hop out of here. So if you guys want to see other charts, leave a comment on the video. Be like, hey man, I wish you would have covered this. I'll make an individual video for it. It'll be like 10 minutes long, and we'll go over the chart and what I think, and that'll be it. So everybody, happy Father's Day to all the fathers out there. And don't forget to go outside and enjoy real life over the weekend. Crypto will be there on Monday when we get back. So cheers. Man, we didn't get through any beers. I got through half of a beer. We'll work on that. I'll work on being